Okay. All right, the third step, I'll just put it right here. So we're going to step 1, admin, step 2, marketing, and step 3 is acquisitions. And acquisitions is, right, putting the offer in, making an offer, right, running the deal analysis and making an offer. You can't make an offer until you run the deal analysis, but that's really what acquisitions is. Getting all of the information from the owner, right? Getting the information from the owner so that you can put an offer in. Okay. And then this is what we go over, like when I talk about deal analysis and all this stuff that I do live, or even I especially go over this in the course. And then also with the deal analyzer, when you buy that, there's training sessions on really how to, use the deal analyzer and run deal analysis and stuff, so, but this is where you've got to get all the information from either the broker or the owner to make an offer. You got to get all the information, right? So you need to get now, obviously, if it's an income producing property, you can get a P&L and a balance sheet, and you can get tax returns, you can get everything. Now, obviously, remember that, on with a cold call, remember, they may not have all that ready. And I'm going to tell you, typically, probably 80% of the time, they do not have their numbers ready. They don't. Okay. Now, obviously, if you go through the brokers, they're going to have all that ready. Okay. And so you'll just say look, okay, I'm going to send you an email with what we need, and then you just give me that information. Right. And that's kind of how it works with the cold call. Okay. And, you're going to have to get the purchase price. You're going to have to get the vacancy, which we call economic or physical. This is really what they're paying, who's there versus who's actually paying. Right. So, we're 85% full on all of our storage facilities, but we're 69%, economic occupancy. Okay. Something like that. Okay. And then you want to get the square footage, total square footage, and the unit mix. Typically, what we do is get the unit mix so that we can get the total square footage, right? Because they'll be it's 12,000 square feet. And then we'll get all the unit mix and add it up, and it's 11,792 or something like this, or whatever. You know what I'm saying? So it's not quite 12,000. And that little tiny square footage, that adds some money onto your deal. So you want to make sure you get exactly the square footage. All right. Being roundabout is okay, but for true numbers, you really want to get you want to get the unit mix. And then also you want to get their pricing. Right. So what are you charging for your 10 by 10s? What are you charging for your 10 by 20s and stuff? So you get the unit mix, the square footage, and the pricing. So you can run numbers on that. All right. And then you also get the, let me see, what else do you get? Square footage. And then you get taxes, you get property. And actually, this is all property taxes. And then you get the utilities and insurance. But the truth is that this is really just a formula. And this is all, this one right here is public data, right? But if you go onto our deal analyzer and you if you click on these squares here, it's a formula, right? Most of the time we're right on spot. Every once in a while it'll be a little bit off or whatever, but because you want to make sure that you want to and the thing is the property tax for them is going to be completely different for you as well, right? So let's just say they bought it for $250,000 and you're buying it for $1 million. Your tax is going to be way more expensive than theirs, right? So you want to make sure you have the right formula, you're looking at the right numbers and stuff. And so that's really key. All right. And then, but this is what you need to get from the seller, right? So the purchase price, if you can get the purchase price, right? So they may not give you the purchase price. They may no, just make me an offer. Then you're going to have to run numbers and stuff, right? But you want to get the square foot, the number of units, the unit mix, the pricing, the total square foot. This is kind of where it's at. And then you want to get the vacancy, right? What, what's the physical versus the economic vacancy? Okay. So, and then if you want to get these expenses, you have, typically we're running our numbers at 38% for our expenses. Okay. Just so everybody knows, like we'll have gross rental incomes, and then we'll have like, minus the expenses at 38% minus, and then that's your NOI essentially is what that is, minus your mortgage. If you have a mortgage, right? And then that's like, that's your cash on cash return. That's like the net percentage of what you're going to be making, or net income percentage. Okay. That's kind of how that works, but so that's what you're going to need in order to run the deal analysis. Now, you don't have to use our deal analyzer. You can use any deal analyzer, right? A commercial deal analyzer is what you need, just as long as you can put your unit mix in, and you can separate everything out. Now, a lot of times too, like a lot of properties that we look at, they'll be like storage plus like, an office that they rent out, some commercial space, a sign, RV parking. You do not want to mix all that together. All right. When you're running deal analysis, each of those are separate incomes, and you have to run your analysis on each of those incomes. Like your RV parking is not the same as storage, right? Because your storage, like the national average, for a 10 by 10 is 80, 85, 88 cents maybe in the United States, like in the 80s. And like RV parking is like 20 cents. Like if you put those together, essentially that just like skews your price per square foot. If you put your commercial, it's $1 a square foot, typically on average for like a commercial space, and if you put that in with your RV parking, it's going to skew everything, right? So you want to separate all of your incomes out, and you want to run numbers on all of those separately. Okay. And then somebody says, with regards to your purchase price, can you have the seller sell you the property mechanicals lease separately? Yes. Yeah, you can do that if you want tax. Yes. So this is actually like the one that we were looking at over here near Orlando. The owner's like, why don't you just buy the LLC? If you buy the LLC, then like you'll save so much money on the taxes is what you'll do. So you could do this as well too. And I've had that proposed many, many times. And we have not yet done that yet because I'm buying stuff in a fund, and and you can't do that, but you have to buy property. So, but that's kind of how. But you could do that if you wanted to. It's definitely better for capital gains. Yes.